Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. It's often a quiet day in the markets, especially this week, but we do have a few key events which can be potentially market moving, which includes the US CPI and the ECB rate decision. Now, Europe has been facing its own problems with a few countries like Germany hindering growth, and participants would be looking at supportive measures which ECB can provide. Good morning, JK. What's your read on the markets? Seems it has been range bound ahead of these key events.
Hey, good morning, Swaraj. Yes, actually, the markets are moving from one waiting room to the other. Last week, we sat in anticipation of jobs report, which actually left the traders inconclusive about Fed's next move. And now we are sitting in anticipation of the monthly inflation numbers tomorrow. Yes, as you said, the jobs report did not give any decisive twist to the Fed rate cut expectations. But there are no worsening factors either as far as the parameters of inflation expectations are concerned. The most important thing that we would be looking at is whether the services inflation continues to moderate, which will boost Fed's confidence on getting the inflation down to the target. So that is the key point in tomorrow's numbers. Overall expectations are uh, unchanged for most of the parameters, except the year-on-year headline number is expected to moderate from 2.9 to 2.6%. In the meantime, while there have been pervading fears of recession in the US, at least that is not borne out by the GDP expectations from some of the regional Fed institutions. So the Atlanta Fed's new model now shows GDP growth at 2.5% for Q3, and that's up from 2.1% that was published earlier. Similarly, even the New York Fed also now forecasts the GDP to rise from 2.2% to 2.6% in Q3. So the market yesterday at least did not actually took note of the fact that while the economy may be slowing, it's not slumping. Kind of soft landing theme that the bulls started to give out as a reason for fresh buying in the stocks. Also supporting the buying of stocks was that the yen did not strengthen beyond 142. And this is the second time that yen has failed to penetrate the 141 level. So maybe we have some dollar bulls uh, getting into some sort of a carry trade, particularly if Fed, despite not cutting 0.5%, remains dovish and open to cutting more as the economy shows more signs of slowing. So that was reflected in the stock market yesterday, where all the three components, major components of the indexes, went up more than 1%. While the Asian markets have not really followed through on that, but at least for now we are out of that big slump in the markets. For at least till the inflation numbers are out tomorrow. And of course, the market is also now looking at another important event tonight, that is India time tomorrow morning, when the Harris-Trump debate will happen in Philadelphia at 1 GMT. That is at 6:30 a.m. India time. Now, recent polls show that Trump has secured a marginal lead ahead of Harris at 48% versus 47%. And this is the first major poll to show a drop for Harris, and this has come from New York Times. Now, the first debate between Biden and Trump gave thumbs up to Trump. Biden's performance was seen very poor. Now, Harris since then has made many speeches and interviews from which she's been seen quite adept at maintaining and good public posture. So tomorrow's debate will be very interesting from that point of view, that whether Trump can overtake Harris, or whether Harris will turn the table against Trump in a better debate. So that's what the market is looking at. You American voters are very closely following this particular event, and it will be important for our going forward for the elections and the US policies as well. But one thing that we observe is that neither of the presidential candidates have announced any credible policy for reining in the huge fiscal deficit of the US, and that is going to be, in the medium term, bad news for inflation, because the government will keep borrowing, and the rates will remain high, and that will also probably keep the dollar also higher due to higher yields. So that's something to keep in mind. Yes, you also mentioned about Europe. And Europe, as we have seen, is seen many negative, or I would say underwhelming reports on the economy. The latest one was the contraction in German economy by 0.1% in Q2. In this context, a report submitted by Draghi, the former ECB president, is on the on the radar of the market, and he has been proposing several strong measures by the European Central Bank and the European governments to attract more money and investment into Europe. But meantime, ECB meets day after tomorrow, and a cut of 0.25% is almost discounted by the market. And in fact, they are expected to act more, because the economy needs more rate cuts. As I said, on the market, stocks have been strong, though not reflected so much in the Asian side. Bond traders look to be more confident on increased Fed dovishness, as yields remain at the more than 1 year low. And this could also be other side, buying, safe haven buying, as equities remain more volatile and are loftily valued. On the currency side, they are less convinced about dovish Fed, because they seem to be pricing out. Actually, they are pricing out a 0.5% cut by Fed. The euro dropping once again to its support at 1.1040, testing the towards a break of 1.10. Dollar yen not sustaining near 142, and even the pound, which has been the best performer among the major currencies, has fallen towards 1.3050. And we have a slew of economic data from UK that will be guiding the pound further. So and yes, also the interesting point is a higher fix by the Chinese authorities today at closer to 7.12 on the daily fixing, which is much higher than 7.09 odd yesterday, which has now weakened the Chinese currency towards above 7.12, in fact. And this might have come about due to two reasons: China not wanting a currency to strengthen too much because the economy continues to struggle, and also, as we've seen yesterday, their inflation numbers were actually much lower than last month, and also much lower than expectations. So overall, a sense of more dollar recovery on the cards ahead of tomorrow's report, at least. And if, of course, if we do see a softer inflation number, a dollar can move towards its move towards testing the key support at 100.50. On the rupee, not much influence came from the unemployment report, which anyway was not a big determinant of a direction for the dollar. We await inflation number from US, and then we also await inflation number from India day after tomorrow. The Indian inflation had fallen to around 3.5% last month. That was helped by a base effect, but that base effect is likely to be not there when we get the numbers day after tomorrow. So how far away we are from 5% or below 5% is what the market will be looking at as far as the Indian rate market is concerned. But the rupee remains very much range bound, not having factors really to break the shackles that it has got into due to RBI's intervention. Thank you.
Thank you, JK. And I think, as you clearly and rightly mentioned, that markets often sit in anticipation. Last week, it was something else, and this week, of course, it is the inflation report. And the services inflation is a point which participants would be looking forward to, and it is. And Fed would also like to see some sort of moderation in the services inflation. Uh, but what I found interesting was, of course, the recession fears not being shared by the US GDP projections, because even the Atlanta Fed's Q3 GDP projection at 2.3%, rising from the 2.1% in Q2, and also what New York Fed has been projecting. So not showing signs of contractionary economic growth. So that's something very interesting. And of course, uh, markets would also be looking at the Harris-Trump debate. As of now, Mr. Trump is leading the presidential race, and it's an important event considering the U.S. elections are getting closer. Uh, and for currencies, euro sterling have lost out against the US dollar, while Chinese Vixen has also been weaker against the greenback. For rupee, we remained in its own world, and participants would be looking at inflation numbers from India, which will also be out day after tomorrow, along with the US inflation data. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.